A few years from now, people may look back at this moment and realize it was the last time silver was still cheap. While most small investors are distracted by AI stocks, crypto hype, and fast money trends, something very different is happening quietly behind the scenes. Banks are increasing precious metal exposure. Billionaires are buying hard assets again. Governments are printing more debt than ever before. And smart money investors are starting to move into silver before 2027. The scary part is, most people still have no idea why. By the time the average investor notices what is happening, silver may already be far more expensive than it is today. So in this video, we're going to break down exactly why smart money is buying silver right now, what could happen before 2027, and why some investors believe this could become one of the biggest wealth transfers of the decade. And if you enjoy videos about silver, gold, and financial trends, make sure to like this video and subscribe to Wall Street Metals because the next few years could completely change the precious metals market. For a long time, silver was treated like a boring asset. Most younger investors ignored it. Social media traders laughed at it because it didn't move fast enough. People wanted meme stocks, crypto pumps, and risky tech plays instead. But smart money investors think differently. They don't chase hype after everyone is already talking about it, and they position themselves before the crowd arrives. That's exactly why many wealthy investors are quietly accumulating silver now, while public attention is still low. One major reason is inflation. Even though inflation numbers move up and down, the reality is that everyday life has become much more expensive. Food costs more, housing costs more, energy costs more, insurance costs more. The purchasing power of regular people keeps getting weaker. And throughout history, whenever paper currency loses value, hard assets usually become more attractive. Gold has always been the king of safe haven assets, but silver is different because it has both monetary value and industrial demand. That combination makes silver extremely interesting heading into the future. And this is where things start getting serious. Silver is no longer only used for coins and bars. Modern industries need huge amounts of silver. Solar panels use silver. Electric vehicles use silver. Advanced electronics use silver. Military technology uses silver. Artificial intelligence infrastructure and data centers also depend on electronic systems that require silver. Every year, industries consume massive amounts of it and demand keeps growing. But here's the problem. Silver supply is not growing fast enough to match future demand. Mining companies are struggling with higher costs, lower ore quality, and slower production growth. Opening new mines takes years, sometimes even decades. At the same time, industrial demand keeps climbing. Some analysts believe the world could face a serious silver supply deficit before 2027 if demand continues rising at the current pace. Smart money investors see this imbalance early. They understand that when demand rises, while supply stays tight, prices can move aggressively. Another reason wealthy investors are buying silver is global debt. Governments around the world owe unbelievable amounts of money. The United States alone carries trillions in debt, and the number keeps growing every year. Most countries solve debt problems the same way by printing more currency and increasing liquidity. But when too much money enters the system, currencies slowly lose value over time. Smart investors know this. That's why many of them move part of their wealth into hard assets that cannot simply be printed overnight. What makes silver especially attractive is that many people believe it is still undervalued compared to gold. Historically, the gold to silver ratio has often been much lower than it is today. In simple terms, it currently takes a very large amount of silver to equal the value of 1 ounce of gold. Some investors think that ratio could shrink in the future, meaning silver prices may rise faster than gold prices if precious metals enter another major bull market. And remember, silver markets are much smaller than gold markets. That means it takes less money flowing into silver to create big price moves. If institutional investors, hedge funds, and wealthy buyers increase their silver exposure at the same time, prices can move very quickly. We already saw hints of this during previous silver rallies when prices exploded in short periods of time. Smart money investors understand how small the silver market really is, and they know what can happen when demand suddenly spikes. But there's another reason many people are not talking about enough. Trust in financial systems is starting to weaken. After years of economic uncertainty, banking concerns, market volatility, and rising geopolitical tension, more investors are looking for assets outside the traditional system. Physical silver gives people something tangible. Unlike stocks or digital numbers on a screen, physical silver is a real asset you can hold. During uncertain times, that psychological factor becomes extremely powerful. Now, does this mean silver will only go up from here? No, silver has always been volatile. Prices can rise fast and fall fast. There will probably be corrections, fear, and panic along the way. But smart money investors are not focused on short-term noise. They are thinking about where the world could be in 2027 and beyond. They are looking at long-term trends like inflation, debt, industrial demand, energy transformation, and currency weakness. When all those factors combine together, silver starts looking much more important than most people realize today. What's interesting is that retail investors usually arrive late. History repeats this pattern again and again. During the early stages, almost nobody cares. Then prices slowly start rising. Financial media begins talking about it. More people become curious. Then suddenly, everyone wants exposure after prices have already moved much higher. Smart money understands this cycle very well. That's why they quietly build positions before the headlines become mainstream. Some investors even compare silver today to other assets before their major breakouts. Before tech stocks exploded, most people ignored them. Before Bitcoin became globally famous, very few people took it seriously. Smart money often moves early while public attention is still low. That does not guarantee silver will skyrocket tomorrow, but it explains why experienced investors are paying attention right now instead of waiting until 2027 arrives. Another thing many people overlook is how emotional markets can become during economic stress. Fear changes investor behavior very quickly. If inflation spikes again, if recession fears grow stronger, or if another banking crisis appears, investors may rush towards safe haven assets much faster than expected. And because silver markets are relatively small, even a moderate increase in buying pressure could have a major impact on prices. This is also why physical silver demand matters so much. In recent years, many coin dealers and bullion sellers reported periods where physical silver products became harder to find during times of market stress. Premiums increased, inventories tightened, and buyers rushed into the market. Smart money watches these signals carefully because they reveal real-world demand, not just paper market activity. At the same time, younger generations are beginning to think differently about money and investing. Many people no longer fully trust traditional retirement systems or government promises. They want assets that feel real, independent, and globally recognized. Silver fits into that mindset perfectly because it has been considered valuable for thousands of years across different civilizations and economic systems. And here's something even more important. Silver is still psychologically accessible to average people. Gold prices feel expensive to many investors, but silver feels attainable. That emotional difference could matter a lot if retail demand increases over the next few years. Large numbers of small investors entering the silver market together can create surprisingly powerful momentum. As we move closer to 2027, the world economy may look very different from today. Artificial intelligence will likely increase electricity demand. Green energy projects may continue expanding. Governments may keep printing more money to support slowing economies. Debt levels could rise even further. And if all those trends continue at the same time, silver could become one of the most important strategic metals on the planet. That's why smart money is paying attention before everyone else. They are not waiting for financial media to tell them silver is important. They are studying long-term trends, positioning early and preparing for a future that may look very different from the world we see today. Now, I want to hear your opinion. Do you think silver could explode before 2027, or do you believe it will stay undervalued for years? Comment below and share your thoughts, because I read every comment. And if you found this video useful, share it with someone who follows the economy, investing, or precious metals. Videos like this help more people understand what may be happening behind the scenes. Don't forget to subscribe to Wall Street Metals for more videos about silver, gold, and the future of financial markets.